Imagine two people. One pulls the heavy lever on a slot machine. The other swipes down to refresh a trading app. Both share a single motivation, the hope for immediate financial gain. But the statistics tell a different story. In both environments, the vast majority of participants walk away with less money than they started with. This happens because both systems weaponize the same psychological triggers. They exploit fear, greed, and hope to ensure the user never stops playing. This neurological model tracks how the brain responds to uncertainty. Notice the extreme spike in dopamine right here, in the gap of anticipation before the result is revealed. We are biologically wired to crave the not knowing. If we morph that timeline into a volatile stock market chart, the pattern is identical. Refreshing a price chart or watching a candle flicker triggers the same biological loop as watching a roulette wheel spin. A casino is transparent about this. It admits it's a gambling house. The stock market, however, masks this emotional roller coaster as a sophisticated intellectual pursuit. This disguise makes modern trading apps far more addictive than traditional casinos, using hidden psychological features that most users never even notice. Modern trading apps use a specific visual language, confetti animations for successful trades, vibrant green candles, and instant push notifications. These design choices are engineered to trigger constant dopamine releases. They prioritize engagement over the quiet discipline required for sound financial planning. This emotional stimulation is a deliberate strategy. High emotional engagement leads to more frequent trading, moving users away from logic and toward impulse. This feedback loop shows the mechanics of the system. A UI trigger creates an emotional response, which results in a trade. That trade generates profit for the platform through fees or data sales. The system is designed to feed itself. Beginner losses are the predictable result of an environment engineered to punish patience. Just as casinos remove clocks to keep you on the floor, trading platforms use frictionless design to keep you clicking. This environment breeds the illusion of control. After a few lucky wins, users often misattribute random market movements to their own personal skill. This false confidence leads to a dangerous escalation. Traders begin taking much larger risks, convinced that their system is infallible. As greed takes over, rational thinking disappears. Users double down on failing positions or refuse to sell losing stocks because their ego won't allow them to admit a mistake. We can see this play out on a massive scale. This chart maps the psychological progression from luck to false confidence to greed directly onto the life cycle of a financial bubble. Individual psychological flaws eventually become collective market crashes. Trading technology will continue to evolve, but the baseline human vulnerabilities remain exactly the same. Despite these similarities, the stock market holds a fundamental advantage over a casino. In gambling, the math is rigged so you eventually lose. In the market, real investing in productive companies can actually generate long-term wealth. However, the constant dopamine hits from modern apps have shifted our culture away from slow, boring wealth building. This demand for instant results transforms a legitimate investment tool into a high-stakes game of chance. Professional investors avoid this trap by changing the question. While beginners focus on how much they can make, professionals obsess over how much they can lose. This matrix highlights the divide. The amateur is driven by internal emotional surges, greed, hope, and ego. The professional relies on risk management and patience. These internal emotional states pose a greater threat to your capital than external factors like inflation or market crashes. Ultimately, the stock market is a wealth generator for those with psychological discipline and a destructive casino for those without it. Protecting your future requires an active awareness of how these platforms compete for your attention and your impulses. The next time you open a trading app, ask yourself, are you investing in your future? Or are you just pulling the lever on a digital